And now it's time for us to move into the second technical session, which is about new income tax code. Are we running behind the clock? Though the DTC report has been put in cold storage, but the general perception is that the Income Tax Act has outlived its utility and shelf life. Top experts are going to deliberate on various chapters of the Act and take a comprehensive look at the capital gains regime, personal income tax, business income, NRI taxation, and many others. To take this technical session forward, let me quickly invite on stage the anchors for the second technical session, starting with Advocate Mukesh Patel. So as we all know, Advocate Mukesh Patel is someone who is really known for his immense contribution towards tax education, and we look forward to hearing from him his insights during the course of this session. Thank you so much for joining us, sir. The second anchor on this session is Mr. Vishweshwar Mudigonda from Deloitte Touché Tohmatsu Limited. He's a partner at Deloitte who specializes in transfer pricing, advises top-tier MNCs on tax and transfer pricing matters, adjunct faculty at IIM Lucknow, and guest faculty at IIM Bangalore. Thank you so much, Mr. Vishweshwar, for being here today. Moving on to inviting the panelists for the session, starting with Ms. Indra, Anand Group Tax Head of Tata Sons. Thank you, ma'am, for joining us for this session. The next panelist is Mr. Rajat Bansal, Principal CCIT, Delhi. Mr. Rajat Bansal is alumni of IIT Kanpur, appointed as member of UN Tax Committee in expert and personal capacity from 2017 to 2021. Also serves as Joint Secretary for Foreign Tax and Tax Research, CBDT, and Competent Authority for Tax Treaty Negotiations. Also on this panel, we are being joined by Ms. Neeru Ahuja, Deloitte Touché Tohmatsu India LLP. She's with us and is a global business tax expert and also leads tax brands and communications team in Deloitte India. She has more than 25 years of experience in corporate and international taxation. A very warm welcome, Ms. Neeru Ahuja. And the final panelist on the session is Mr. M.S. Vasan, Senior VP, Hinduja Global Solutions. He's with us as the last panelist for the session and is a specialist in international tax and transfer pricing. He's worked in manufacturing as well as services industry and authored books on transfer pricing, audit practices, direct taxes, Ready Reckoner, and Master Guide to Income Tax. A very warm welcome to both the anchors and the panelists. And now the session is open. I request the anchors to get started with it.
A very good afternoon to you all, friends. And in the lighter vein, ironically, I don't know whether the new income tax code is whether we are running behind the clock, but at least this discussion on the code, we are running behind the clock. I have, however, been assured by my dear friend Rajat that we should do justice to this session, and therefore, maybe, I hope we might eat a bit into your appetite. Well, friends, they say don't watch the clock. Do what it does. What does it do? Keep going, keep ticking, right? And for me, it was one of the most enriching experience of 4 years from 2015 to 2019. I would say close to almost 10%, a little less than that, of my 4 decades plus of professional experience, when during these 4 years, I had the benefit of looking from the other side, being part of two very important bodies which were entrusted almost in a spirit of public-private partnership, where firstly, as part of Justice Ishwar Committee for Simplification and Rationalization of the Direct Tax Laws, I was a member of the 10-member committee headed by Justice Ishwar, and later also a part of the 6-member task force on direct taxes. And this was back to back for 4 years. And I said public-private partnership because we were together, just as we have today the pleasure of having Mr. Bansal with us from the official side. In both our committees, we had the official and the professional and the taxpayers duly represented. And therefore, as I said, during those 4 years, we focused ourselves on the journey and not the destination alone. In 4 years, we had over 135 interactions where we all joined our heads together. We traveled all around the country to get the response and feedback from the stakeholders, both on the official and the unofficial side. And that is how we could go ahead. So first and foremost, I'm very happy. In fact, Tax India Online always comes up with something very insightful, but the subjects of this 2 days Tax Congress conclave are really very insightful, which we have been seeing since the morning. And since we have had no poetry, I'm just taking half a minute of sharing a couplet very beautifully said by one of my favorite shayars. And he said, "Manzilein unhi ko milti hai जिनके सपनों में जान होती है, मंजिलें उन्हीं को मिलती है जिनके सपनों में जान होती है, सिर्फ पंख से कुछ नहीं होता, हौसलों से उड़ान होती है." Friends, this hosla, this tempo, the spirit which this 2-day conclave is going to be reflecting, and the thoughts that are going to be shared, disseminated and captured, I think is really going to help. Taking just a couple of minutes more before I start the ball rolling, requesting Vish to take over from me, as was rightly observed since morning and in the session immediately preceding, IT for IT for IT for IT has done wonders. Information technology for income tax, for India today and for India tomorrow. Friends, voluntary compliance, we know very well, after 4 years from 17, 18, 18, 19 up to 2021, the direct tax collections were in the range of around 10 lakh crores. And in a single year, post-COVID, mind you, there was close to a 40% jump, and in 21-22 we registered 14 lakh crores. Now what did the magic? We did not have the new code. We did not have anything dramatic as far as the law is concerned, but there was a big change in the system, the technology, which influenced the minds of the taxpayers and professionals, about which much was talked this morning on AIS. But not just AIS, I think AIS and faceless scheme assessments, the combo really did the magic. Because when the taxpayer, when the tax professional got to know that the department is knowing everything about them, they are very curious to ensure what the department knows and definitely make it a point that they do not miss out on that. This one point was a big trigger for voluntary compliance. Not just at that. The earlier mindset that whenever it comes, we'll settle. Gone are the days. In the faceless scheme, there is so much of transparency, accountability, and independence in terms of the entire decision-making process that the mindset changed. We cannot resort to the old practices. I am very happy that the AIS and the faceless, these two anchors, were part of our disseminations along with the several other changes that we could bring. Friends, the question comes, we were deliberating and Vish asked us a very pointed question. In fact, Rajat ji also, that do we really need a new code? Do we really need a new law? We want simplicity, yes, but will simplicity alone help? And in the words of Leonardo da Vinci, he said simplicity is perhaps the best form of sophistication. So if your simplicity goes to become sophisticated, if something that can be said in one word, you want to stretch it out. And this is what we got, the inheritance from the British prince. Verbosity. What can be put in one line is stretched into so much, to the extent I had, Mr. Bansal, an occasion to interact with the British High Commissioner at a public function when I said, when I was president of the Gujarat Chamber of Commerce and Industry, that, sir, it's been decades since you left, but the heritage that we have left behind is still, not leaving our mindset. And that is, and I gave an example, that if I have to give you, Mr. Vasan, an orange, I would just say, Mr. Vasan, here is this orange, and that would be the end of it, right? But if the draftsman has to do it, he would say, I would hereby give, grant, and convey unto you all my right, title, and interest in this orange, with or without its skin, juice, pulp, or pips, with full right until all time in eternity to eat, bite, cut, chew, or suck the said orange, with or without its skin, juice, pulp, or pips, subject unto any amendment that may hereinafter be made under this agreement. Friends, just imagine, we have lived with this all these years, and now we want to get out of it. We want the new code. But I am leaving this thought for consideration. We talked about ease of doing business. From where does the ease come? Is it, the law can be very simple. But if the interpretation from that very simple law is going to be complex, it will give rise to a Pandora's box of litigation. And we have examples not far to see. You know, we had this law on penalties settled for so many years. What is concealment, what is inaccurate particulars, was very well known. But then, in the name of simplicity, we brought in this entire new section, 270 capital A, and we said now we are talking about underreporting and misreporting. You do not have in the Income Tax Act the words concealment or furnishing of inaccurate particulars anymore. You have underreporting and misreporting. 50% penalty and 200. And invariably we have seen the Lakshman Rekha is nowhere kept or taken care of. So we are now in an entirely new, litigation arena as far as penalties are concerned. I remember my guru, Nani Palkhiwala, he used to say that the best way to bring about simplicity is not make a change until it is really required. We got the hybrid scheme of old and new because we wanted different rates of corporate taxation with and without riders. We brought in similar provisions in the individual law of taxation. But, friends, 30% of tax, and on the top max you have a surcharge of 37%. So your topi is much bigger than your head. The surcharge, if we keep on experimenting these things, this is one of the points that we would like the panel to discuss, that if we are looking at the new code, what is the focus on simplicity? To what extent we want to rely on technology to do the job? Do we really need to go into these experiments? And whether all this exercise, unless we have a clear focus, we have this very recent example, friends, the provisions in relation to reassessment of income, only one chapter were changed. See the amount of writs in High Court, Supreme Court, Board Circular, and what followed thereafter. Still today, you do not know what is what. So we definitely want change, but then what should be the focus of that change? I think these are issues which we want to discuss this afternoon, and I would request my friend Vish to start the ball rolling. I'll take a couple of minutes only at the end to sum up. And with this, we start the new income tax code.
Thank you, Mukesh. Good afternoon, everyone. I know we are actually standing between you and lunch, or rather sitting between you and lunch, but I'm sure the panelists here would give you enough food for thought to keep you away from your food for another 40 minutes or so. So with that, I'll just pick up from where Mukesh left or touched upon. I think, from the time we talked about the new direct tax code, there has been a lot of changes that have happened, whether it is, taking away the fringe benefit tax or various other amendments that have been introduced. But still, we are in a land where the punctuation or the grammar decides the incidence of tax. Whether the comma is before or after, or are you looking at or looking through. So given that, do we still need, the same question which I've asked earlier, do we still need a new tax code? And this is a question to all the four panelists to give a quick take on this question. Maybe Indra, I'll start with you.
I think it's started. a very good afternoon to all of you. I think it's explained in so many good words by Mr. Mukesh that the entire thought process of bringing in a new tax code, I think the perceptions, we need to be prepared to accept the new tax code. If the mindset is going to be what it was, to stretch and to interpret each and every new word which is introduced into the new tax code, we'll not be better off. So to say that, we have a jurisprudence, a history of jurisprudence on the old act, it is riddled with around 100 amendments so far and more coming. With the new e-commerce entry and the changing nature of businesses being conducted, I'm sure that this is leaving more and more area, more and more revision in the existing code. But then to set back all of that and to start afresh, I have my thoughts. I think we are as existing in a good shape, but then for sake of simplicity and clarity, to imagine that we have 900 sections for 1 to 298 sections of the Income Tax Act is a little too very complex for anybody to look at it. When we talk about ease of doing business, tax becomes a very significant portion of our cost. Anybody wanting to do business, tax is immediately the question. And to understand that and to decipher what it's trying to say, best left simple and best left what it has already achieved. So to my mind, we are, a little, every now and then with so many task forces being set up, the thought of entering into a new tax code is being pushed for some reason. I think this is where it is. Even a small introduction of something new, replacing in the old act, gives us so much of more analysis to do that it has to come part by part. And once you've laid it under the old act, maybe it's time then to perhaps pick up and then raise it to the new tax code. That's my take on it.
Thank you. Vasan?
Good afternoon, friends. See, in 1922, we had the Income Tax Act. 1961, we had a new Income Tax Act. So, first one took 40 years. Second one, now it is 80 years. So, I think this is a right time where we get into a new Income Tax Act 2022 or 2023. Why I say this is, if you look at the Income Tax Act, notwithstanding anything contained in any other provisions of the Act, this non-obstante clause clearly links one section to another, right from section 1 to 198, and with all sub-provisions put together up to 900. So the interpretation, the leeway for being subjective and being litigative is very much there in the present system. Added to that, earlier we had the retrospective amendments. At least this government has come up with the prospective amendments only. But this is also doing the same way, but prospectively, when there is a judgment in the High Court or judgment in the tribunal or in the Supreme Court, they go back and amend the law. So, net-net, we are at the same position where we were in 1961, and we are continuing that. So, it is high time for us to get away with all these non-obstante or anything which is read here should be read there also, or should not be read there. Like that, all these confusing provisions should be done away. Make it as clearer as possible for even a non-tax professional to read and understand. So consolidation and codification of all these sections is also very much mandatory, given that we have in one section we have A, B, C, D up to Z, and then AA, BB, CC. All these things are too much confusing, and we need to do away with all these things and connect one section to another in a clear way, or keep it independent, self-contained, and define there itself, have guidance note to that, attach that as part of the law, and go ahead with that.
Sure. Rajat ji?
Thank you. First of all, I thank the organizers of this conference. And secondly, I'll just like to mention that whatever I'm saying is in my personal capacity, being a government officer. So the issue is whether we should have a new tax code. So essentially, what should a tax code have? I think a direct tax code or direct tax law, what it should have is something, if we list it out first, then we can see whether the existing one is good enough or do you need a new one, and for what reasons. So firstly, for a country like India, a direct tax code, or for any country, it should promote voluntary tax compliance, because the resources to enforce will always be limited. So the way tax base can grow or tax to GDP ratio can grow can only be through the voluntary tax compliance. So what does it entail? One thing it will entail is the reasonable or a moderate tax rate regime. So that should be there. Then there should be stability for a period, so that there is a confidence amongst the taxpayers that this is how I am going to be treated for this much period of time. There will be several other aspects of voluntary tax compliance. And what has been done so far in that area by the existing law? Over the years, there has been increasing emphasis on voluntary tax compliance, be it pre-filed return, be it updated return, be it the stability in corporate tax rates since 2015. Over a period, we have gradually reduced the rates and introduced them in the Act itself so that they are stable for some time. So a lot has been done for voluntary tax compliance. Next would be that the tax code should serve the purpose of raising revenue for the country that is required for a developing country for its development. And as Mukesh ji mentioned in his opening address, the tax code, last year we saw a collection of 14 lakh crore higher than ever. And I think 52% was the share of direct tax revenue, which was higher than indirect tax. And it was probably not so in quite a few years. So that instills confidence that the tax code is not doing so badly. And next element which I would say is the tax certainty, that taxpayers would need tax certainty, about which maybe we'll be talking more, but that is another very important aspect. Then the tax code should serve the social and economic objectives also, because ultimately direct tax code is used for various other purposes as well in a country like India. And one more aspect I would mention is the international best practices and international obligations. Our code should be able to serve that. And there also we have seen number of changes, like we could introduce CBCR, we could introduce AUI related provisions, several APAs, etc. So how have we fared on the existing direct tax code? I think whatever we want to achieve, that existing code has not been an obstacle for that, and we are able to do whatever we want to do. So what is the real reason, according to me, for thinking of a new code? And the committee of which Mukesh ji was a member was constituted to review and come up with a new code, and we don't know what was the final decision for that. But one thing is certainly there, that over a period of time, due to so many changes in law, the law has become complex, and there are unintended ambiguities which cannot be helped. And when you alter a structure of an existing law, then there are constraints, and due to which you have to alter it in a particular manner. And that what you can do with a new law, when you're writing it up fresh, you cannot do it with an existing code. So I think that is the main reason for which I would say a new code can be thought of. And otherwise, I think the existing code is serving the purpose for which it was enacted. Thank you.
Thank you, Rajat ji. Neeru.
Thank you, Vish. And I would just like to add, all the speakers before me have covered a lot. Just 2 points I would like to add. In my view, and this is a very good debate we are having here today, in my personal view, I think there is need for changing. There is need to have a new law in place for various reasons. And to my mind, one of the most important things is that the way businesses are done, the way the economies are working, the political setups across the world, everything has changed. And we've been hearing about this change since morning, you know. One of our speakers said in the last 10 years, we have seen change amounting to 100 years. So I think change is imperative, change is good, and we need to move forward. I do agree that a new code, we should start thinking, we should start writing, we should start discussing. So for all these reasons. And the second point I want to make is that I think the resistance is all in the mind. The resistance and the reasons which we think of why we should not change, it's all in the mind. And I draw upon the parallel from indirect taxes. I mean, what could have been more complex than the bringing in of GST and doing away with all the complex indirect taxes laws we had, which included central laws, state laws, you know, excise duty, service tax, so many different taxes and taxes at different levels of government. If our country could do that and implement it well, implement it successfully, we are seeing the benefits. I don't see any reason for not making a change in income tax. So I think it's all in the mind, and how we proceed with it, how we plan for it, how it's implemented, those become very important factors.
Thanks, Neeru. I think it is good to see that the entire panel's answer is emphatically, yes, we should go for a new code. And especially, Neeru, what you mentioned, there is a lot of work that has already been done. It's not that we have to go and start. I'll not hazard the question of saying that when will the new code come into place. But what I would like to ask each one of you is to say, as and when the new code comes, what is that one or two provisions that you would like to see in that new code which addresses the existing problem? Maybe this time, Neeru, to give you more time, I'll start with you.
So I think I'll take a cue from Rajat ji said that a lot is happening at the international level. You know, for example, the OECD Pillar 1 and Pillar 2. Now, these are totally new rules, totally new ideas, totally new concepts. And obviously, our domestic law will have to be amended to take into account. For example, Pillar 1 talks of new taxing rights for market jurisdiction. So obviously, India will be a beneficiary, but today we don't have the legislation in place to provide that right in our own income tax law, right? Similarly, Pillar 2, which talks of minimum global taxation, we don't have those rights today in the Income Tax Act, and these are very complex matters. It will not suffice merely to change a section or add a provision. So I'll just use these as examples to show that substantial work will have to be done, and whether we decide to do it under the same law or a new law, that is open to debate.
Thank you. So you want to see the Pillar 1, Pillar 2 related amendments which enable the implementation of that.
Yes, yes.
Rajat ji?
So as I said, I don't see the need, I see nothing that cannot be done in the existing code substantively. The reason I feel need for new code is due to the simplification required, and if there are inconsistencies or anything ambiguous, that can be addressed better through a new code. So there's no specific provision which I feel I would see in the new code that cannot be seen in the old code. Because structure will remain the same, the basis of taxation, unless we are thinking of change in the overall taxation scheme, residence scope and the way we do it. If we are not thinking of changing the entire structure, then the present, that's what. Yeah.
Rajat ji, I have a small rejoinder along with this point. I'd like you to respond. As you rightly mentioned, ultimately, you know, it is going through the journey, as I observed, what is more important. And let's not just look at the destination. And the journey, if we are, you know, taking the right steps, I think we are going through correct, no issues. Sir, one of the major concerns, and in fact, you know, I have to be tight-lipped because just as you mentioned, you have a dual role. You know, you were expressing your personal views and you have the department. as I'm not speaking here as a member of the task force. We've already done our job, and let me tell, it is for the first time that I'm getting an opportunity to say this. I'm not revealing any secret, but at the same time, I can say that the task force, after all the hard work that we did for over 2 years, what has been presented to the Honorable Finance Minister is a complete code. And mind you, Mr. Vasan, there are no provisos, there are no explanations, there are no alphabets attached with the section numbers. So these were the cardinal principles, that there has to be simplicity, there has to be clarity, and we have to ensure that there is no ambiguity. To the extent possible, all the good things of our present act, we have kept them intact. But we've also done a lot of new insightful thinking. What has happened is, since the code, which it was, the draft was presented, a lot of things have happened, and it's no secret that they have happened because they have borrowed. In bits and pieces, you have already seen what was there in the code. Of course, there has been a lot of tinkering to that also. And therefore, it has lost its luster. It's not 24 karat gold. A lot of our proposals, they've been made like 16 carats, 18 carats, and making them 16 or 18 sometimes makes it even more complicated. Sir, I want to ask you is, dispute resolution. This is one of our major concerns. On the faceless assessment, we are happy. There are aberrations. We'll talk about them and resolving them also. Vish is going to take up that question for you. But don't you feel that dispute resolution should be one of our top priorities? Because as I said, unless and until, even if a simple provision is just twisted around and interpretations are made, there is no accountability for whatever is, the high-pitched assessments keep on happening. And where the taxpayer, in fact, the focus should be that if the taxpayer is prepared to, as in most countries it is, buy peace, pay taxes, pay the interest, that should be the end of the matter. Why should the matter go on and on? So what is your view? Because there are juicy proposals we have in the code that we have presented that should see the light of the day.
Absolutely. If I may supplement, see, I think dispute around paying tax or not paying or how much is never an issue. But the time it takes to resolve is what really an issue when you look at from a multinational investor community. So therefore, conciliation, because a lot of clients ask, is there a way I can pay and get off this litigation bus? So therefore, sir, your views on the conciliation, just when you're answering Mukesh's question.
Okay, so yes, I fully agree that there should be a mechanism through which the matter can be, once it is in dispute, the matter can be concluded fast. So like it happens in mutual agreement procedure under the tax treaties. There is a forum where not all, but quite a few, at least transfer pricing cases get resolved very quickly. And a certainty is there without passing through so many levels. So similarly, maybe we do need a dispute resolution mechanism where mostly the disputes are in gray area. So no one can say that this particular stand is correct, or the revenue cannot say that they are 100% correct. Taxpayer cannot say they are 100% correct. Most of the areas, some may be very clear. So for those areas, there should be some mechanism to decide them fast and reach a conclusion, be it of any kind. Other countries do have various kind of mechanisms for this, and we can definitely think of including them in our law.
Thank you. Vasan, would you like to share a taxpayer's perspective of to how you would look at conciliation and what would you expect?
Absolutely. In fact, today the industry doesn't want litigation as such because we don't have sufficient manpower. Indra will also agree to that, because we don't have a big tax team where we can run around handling those litigations before the assessing officer or before the CIT or ITAT, or going and briefing the councils and getting all these things done. Literally, we don't have manpower, we don't have money also. So the organization clearly says whatever is there, you pay the tax and come out. That's a very clear direction from the industry perspective. So given that, this conciliation proceedings which are there prevalent in other countries, we can take a cue from there and see if we can set up something in between the AO and the assessee, in between an independent body or expert panel or something where they can iron out, at least if not a subjective or a litigative point, majority of them if can be ironed out, then at least the assessment order can be as simple as possible, leaving a few big ticket items. You know, big items, of course, there could be a difference between the revenue and the assessee, and it has to be settled up to the highest court, which is happening today also. We are absolutely fine. Except for that, rest of them, if it can be ironed out through a conciliation process or through a dispute resolution process, which can be robust and have a speaking order, which will impact both assessee as well as the department, rather than putting the revenue hat to that. If that can be done, absolutely we are for that.
Sure. It's basically, what you're asking is, it was there, attempted, but may not be as successful if you look at the dispute resolution panel. I mean, I'll not speak much about the reflections on that within the tax administration. Forget the taxpayer community, but how the DRP is functioning. Maybe that was a step where there could have been a significant progress that amendment could have been used for. But I think that is one place where I think we missed the bus. Would you like to share?
Just that for the conciliation process, yes, it's a very good alternate dispute resolution mechanism, which will go a long way, provided the strain already on the existing judiciary to handle so many matters, and if both the sides are ready for a conciliation process, saves a lot of energies, the money, the time cost spent on all of this. Also, may I add, when we talk about, clarifications, what the international tax community also desires is clarity. So for which I think some mechanism to come in form of circulars, notifications, as soon as there's something new which is coming up, if there's a clarification proactively from the government, it's much appreciated. We've recently seen in these TDS provisions, immediately there are circulars to clarify the intent. So such kind of circulars will go a long way to absolve problems which we see at the very initial stage. So, kind of a preventive measure rather than reaching a top level litigation which ends up taking years of precious time on that.
Sorry, maybe I'll just stick with you on the amendment that you would like to see, or rather not amendment, a provision in a different avatar in new code, which you would like to see.
As I said, litigation is the much thought of process. So some mediation on the litigation. It's a stretch to reach Supreme Court, about 10 to 15 years. Matters go beyond, even the threads, people change hands at the department side, at the assessee side, and the entire setup changes by the time the issues reach finality. So I think some process to capture this aspect in the new tax code.
Vish, I would like to add one thing. In the new code, there should be no deeming fiction, which is really haunting, and anything deemed is subjective. You deem X, I deem it as Y. So there is a subjectivity, and there comes the litigation. So why do we need to have deemed to accrue arise in India? Why don't you specify X will be subject to tax in India, Y will not be subject to tax in India? Why are we having deeming? Why do we say deemed international transaction? You say this is an international transaction, give A to B to C. A and C are internationally connected. You tell that openly. We are ready to go ahead with that. Why are you putting in a deeming provision or a fiction where it can be interpretative?
Yep. No, I totally agree. In fact, since you have touched upon that, I'd say action in concert is something I always try to say, how do I actually, in what situation, because anything which you look at between 2 or 3 parties, it would be action in concert. So, sir, maybe this question to you, Rajat ji. There is a charter which talks about taxpayers' privileges, their rights, and it also talks about the tax officers' responsibilities or accountability. What is your take on this accountability, especially when a litigation could take 14 or 15 years? And just in jest, I would like to add, I was talking to this newly imported CFO of a foreign company. So I had to present this entire litigation history of that company to that man. When I started with 1983, he said, boss, I was not even born at that time. And I said, yeah, okay, I was in my middle school, so I didn't even know what Income Tax Act at that time, to be precise. So, sir, any thoughts on how this accountability can be? I know it's a fine balancing act because you cannot have a sword hanging all the time when you have to take decisions. Even in private sector, there are decisions taken and we move on. Sometimes we would be right, sometimes we would be not right. So, your take on that, sir?
So first of all, I'll say that accountability is a very important aspect to instill confidence amongst the taxpayers, and and it will in turn promote the voluntary tax compliance, which I consider is the most important aspect for the country. So now, as you yourself said, that one has to look at the circumstances in which a decision was taken, and hindsight is always good. So one cannot go by hindsight always. At the same time, I do understand what you are saying, that accountability needs to be improved to a great deal in the tax department. Now, several steps have already been taken, like for issue of refunds or processing the cases, or I think there is a lot of improvement. We keep on hearing good things. And grievance redressal mechanisms like CP Gram or E-Nivaran are also given importance by the department to a very great deal. Maybe not to the extent it's known, but it is done. And taxpayer charter is through the legislation now. 2020, it was introduced in the legislation itself. So that does give a weightage to it, where taxpayers' rights are listed. And I think Ms. Mukesh ji mentioned one thing in his address about high-pitched assessments. So local committees have been constituted in every principal CC charge to look into the grievance relating to high-pitched assessments. And more than anything else, I would say that once there is a body like this, and the applications or the grievances under that scope are being examined, a message is sent across all around that yes, one has to be more circumspect and more careful while dealing with the matters of taxpayers. So I think, I'm not saying that everything is 100% up to the level required, but there is definitely a great deal of improvement over the years, and there is a constant endeavor to improve the accountability.
Sir, just complimenting on this, in fact, I took up the mic just to remind you, but I'm so happy you made a mention about these committees, which look into these high-pitched assessments. And I think that has been working reasonably well. But the problems of coordination, because we have CPC on one side, we have the faceless assessment authority on the other, and then we have the jurisdictional AO. Now, in several situations, matters go from pillar to post. You see, a faceless assessment is done. For rectification, they say it is entrusted to CPC. Now, how CPC will take a call in such matters? If I go to the jurisdictional AO, the AO says, I have no idea about why this thing has come up. Sir, these are some areas on which, of course, time constraint is there, but I had sent you a note. Would you like to quickly respond on that?
Mukesh, the only thing I'll say is that we are passing through a transitional phase. This scheme was introduced in 2020, and it's been 2 years, and we have to give discount for COVID also, which was there for a very large period in this time. So now this separation of jurisdictional officer and faceless officer is an intrinsic characteristic of the new scheme. And so long as that is the way the scheme is devised, some of the issues you mentioned are going to be there. And I mean, it's too soon to change everything because I think stability also is very important. But definitely all these issues are well known and are being worked upon.
Sure. So Mukesh already has signaled saying that from new code, let us maybe talk about a couple of present issues that are there today. So just switching gears, you know, I think our slabs, personal income tax slabs have been revised in 2012 or so. And it's been almost 10 years if you look at and compare with the cost of inflation index or your fuel prices or dollar exchange rate. So do you think there is a dire need to relook at the personal income tax slabs?
Well, 1993, 94, when we had the initial 2,50,000 slab coming in, the indexation was around 220. Today it is 331, a 50% raise. Certainly this needs a relook. Leaving aside the 87A rebate we are talking about for not taxing taxable incomes up to 5 lakhs, certainly even the middle class who earn a little more than that shouldn't suffer because of this. Leaving apart, I think it's high time that we need to revise the basic tax slabs.
And also some of the slabs like your medical insurance, I think, you know, whatever the
Yes.
amounts.
The ATC deduction part of it entirely, if at all it has to be given fairly. Otherwise, it's namesake. Today, even the education allowance and all we see still standing at those numbers, not touched upon for years together. So, I mean, something in the act should have value, something which is, you know, relatable to reality.
Children's education allowance, 100 rupees per month per child for a maximum of 2 children. It's a mockery.
There is no school where you can just pay 100 rupees as the school fee.
In fact, I would suggest, like in the US, you can have a clubbing of income between the husband and the wife, and when they are running a family together, these expenses can be claimed as a deduction, clubbing both the income, and by doing so, the slab also can be at a higher rate vis-a-vis an individual. So, but there should be a cumulative deduction for each of the expenses for running the family as well.
Thanks, Vasan. Neeru, if I may request you to throw some light on this new tax regime on manufacturing companies. And what the law today forces is for an existing company to set up a new company, start it as a new facility, and if they expand, then they do not get it. So in a way, law is also today forcing you to look at some sort of planning, which again at a later point in time, you do not know how it would be looked at under GAR. So what's your take to take away the disparity? What kind of amendments do you think will make sense?
That's a very interesting question, Vish. And, you know, we spoke to many companies and clients that, you know, this is such an attractive rate for new manufacturing companies. 15%, 17%, you know, amongst the lowest in Asia Pacific. And why aren't you using this? And it always came down to being a business issue that, you know, when there is an investor, there are shareholders, they're already running a company. And that company has all the setup, the plant, the machinery, the customer base, the vendor base. For them to get into a new legal entity, you know, and set up all of these things all over again, instead of using the existing company, which perhaps may also have some capacity lying, which is underutilized, you know. So then to create a new company and establish all of the business items I mentioned in the new company, it's too much of a pain, and also the shareholder value gets diluted. So because of these multiple business reasons, companies are not really availing that lower tax rate, which is bad, because if the government has given such a huge incentive, we are not able to use it. So I would strongly say that we should relook at the criteria that this is only going to be available if the plant or if the manufacturing is set up in a new company. So if that new company condition goes away, that will solve a lot of problems. And I can also understand why there was a requirement made, perhaps so that there is no shifting of profits, perhaps, or better control or better review. But all those audits or due diligences can even be performed under an existing legal entity setup. You know, we do have other tax holidays which are still running, and there are provisions which allow, for example, the domestic transfer pricing provisions are there. You have to get the unit audited separately. So we could have those checks and balances. But in order to avail a lower tax rate, if a businessman has to necessarily set up a new company, that is acting as a challenge, Vish.
In
Thank you.
fact, I would like to add here, see, in 1995 itself, International Monetary Fund did a detailed research on whether tax and investment go hand in hand. And similarly, OECD also did, and Dr. Patsar committee also did some exercise on that, whether tax or non-tax incentives are more relevant for investments. If you look at the incentives, the exemptions, deductions, or tax credits, all these or subsidies, all these actually go and increase your bottom line. But however, you would have to have the setup cost, as Neeru rightly pointed out. So these all non-tax cost go much more than the tax cost. That's why, you know, even in this recent amendment where the concessional rate is given vis-a-vis regular income tax rate, that's very helpful. In fact, effectively, if you look at it, instead of 35, you end up at 28 or 27. Whereas when you are at a concessional rate of 25.17, which is much more beneficial for the taxpayer as such. So this incentives, in fact, when we look at 10A or 10AA deductions where a unit is an expansion unit or a new unit, this is something which is still there at the Supreme Court level even today. Even though we have all the documents supported from the assessing officer level, it has gone up to the Supreme Court level, and where the Supreme Court says it has to look at those conditions, whether it is a new unit or an existing unit which is expanded. So these all are becoming more subjective and litigative when you give some deduction and have some conditions attached to that. And instead of these, we can go for a concessional rate based on the artificial intelligence and machine learning data science proposals, which are very handy with the income tax department to run through and see what could be the effective rate after claiming those deductions by these new units, and fix that as a rate for them so that they don't need to really look at those conditions or fulfill those conditions and get into the rigor of whether they are fulfilled or not. And AO also will be relieved to that extent of just signing off there at a concessional rate without going for these things. Sure. When you want to give, you give it. That's it.
So basically you're saying do away with all these exemptions and incentives, just give us a rate which is simple, which is again go back to the tenets which we are talking about, a simplified law.
Absolutely. Yeah. And it will be clear also.
Thank you. Maybe Mukesh, I'll just pass it back to you to see if there are one or two questions from the audiences and for closing remarks. Thank you.
I think the only questions that will come up is how long do we have to wait for lunch? Anyway, if there are any questions or very focused pointers, I think we'll take them, because this is something which affects one and all of us, because we are all taxpayers apart from being tax professionals. And people like Rajat ji, you know, tax administrators as well. So we all are stakeholders. Any points to take home? If not, I would like to just wrap up, because, you know, we are, I think time is, we can't let the clock run late. I think the panelists have made some very interesting observations, which if we try to shape them up, and I would request Tax India Online, because we are not very far away from the budget. to take some of the points that we have taken. First and foremost, though I very much appreciate the wish of everybody that, we must have the new code. All that I would say is, there is a new code already in the treasure chest of the North Block. They have been picking, choosing, taking, modifying, doing this, that, and trying to do that. Probably they can be a little more aggressive and keeping the priorities in mind, at least some very definite areas. I'm very happy that 4 years that we spent, if we had not, the faceless assessment scheme would not have come, because we really gave shape to that. And I fully agree with you, Rajat ji, aberrations apart, faceless assessment has done a huge amount of good to the economy, because it has really, really boosted up the voluntary compliance. I am for, technology support in a very big way. Can you imagine? Friends, I want to make a mention of, because good things also need to be noted. And Rajat ji, you can pass this on to CPC. We could not have dreamt in the good old days, Babus would keep refund, orders in their cupboards and hold them up for not months, sometimes years together. And today the CPC there are cases within minutes, if not hours, or even 24 hours at the max, that you get not only your intimation, but a refund. This is IT for IT in the true sense. So if we use technology along with a very positive mindset, and sir, I do agree that there are these shackles of the old which are still, like deeming provisions you said, Mr. Vasan, we have deeming provisions, if somebody really wants to make, your life a torrid, experience, they would say the money that you have accepted even from your closest friend whose source, cannot be questioned, they would say this is an unexplained cash credit, apply 83% of tax and penalty, and then immediately say, we recover 20% of the tax demand. And today, we have no time to talk about it, but dispute resolution is extremely important, because the first appeals for almost so many years now, they have not moved. We are being told, in fact, I think Indra, you said that in tribunals, now they do not have pending appeals in many tribunals beyond 6 months. And it's not that, there are no appeals, but there is a huge block at the first appellate authority. So if we don't have a robust dispute resolution authority, I think it is not going to help. There are positive provisions, like we already have one in the Act which says, if you accept the addition and say that I'll pay the tax and interest, there'll be no penalty and prosecution, one wants to buy peace. But the biggest problem, I'm just articulating this without revealing any leakage on this point. We were unanimous at the code that this is taking a myopic view. Say there are 4 points, and out of 4, I want to accept 3 and contest only 1 because it's a legal issue. Today that is not possible. Now why do we want to wait until the new code? This is a provision where without any loss of revenue, you just fine-tune the section saying this. So I would say at the end of the day, a lot of thinking out of the box, which starting from you to each one of our panelists has come out. We will certainly keep our fingers crossed for the new code to take place. But while that big mega event is in the making, let's not, the small and beautiful things, let they not be lost sight of. And I think with the budget round the corner and with such a robust and healthy discussion that has taken place, I would say let us not miss the moment. Sure. And if I have to take, once again, I started with a couplet, I'll end with a couplet, and a couplet of none else, but Shailendraji, you must listen to this, because tomorrow we are giving the Fiscal Heritage Award to Dr. Manmohan Singh, who ushered, 91, 92, the complete revolution in the Indian economy. I recall the last couplet of his budget speech, because I was sitting there in the parliament, when he said, कुछ ऐसे भी मंजर हैं तारीख की नजरों में. There are some milestones in the pathway of history. कुछ ऐसे भी मंजर हैं तारीख की नजरों में, लम्हों ने खता की थी, सदियों ने सजा पाई है. Let us not miss these small beautiful moments in anticipation of some big fruits to come. Otherwise, it may cost us large and high. Thank you,
On
my
that
dear
note, thanks
panelists,
to the
and thank you
panelists,
to all of you.
Thank you, everyone. Thank you a lot.
Thank you to all the panelists and to the moderators for moderating the session so well. It was really a robust discussion of interest to everyone. Before we let the panelists go, can I please request the TIOL team to come on stage and felicitate them? Thank you to all the esteemed panelists once again. Can we quickly have a group photograph, please? Thank you so much. Thank you so much for making time and joining us today.